Let's get to the commodity market action now. We are joined by Jonathan Barratt, one of our regulars, but he's actually in our Hong Kong studio today instead of here in Sydney. Jonathan, of course, is Managing Director at Commodity Broking Services, alongside our guest host, Kathy Lien from GFT Forex, who's normally in the States and is joining us today from Singapore. Shuffling of the cards, guys. Jono, tell us about your trip. You're up there from the Money Show, which I believe we've got Bernie Lowe and Emily Chan along there with you. What are you hearing at the Money Show?
Look, Karen, it's great. There's quite a few people. We had Mark Faber actually say a few words as well. It's been well attended, and so far it's been a lot of fun.
Okay, the commodity story. The gold trade was worth a chat about because overnight we did see it falling back because of the euro falls and the increase in the US dollar. What direction do you see from here? Will this relationship, inverse relationship between gold and the dollar continue?
Yes, I think it will. I think the US dollar remains relatively well bid as a form of risk aversion, and I think that's going to hurt some of the commodities. When you look at gold, gold certainly has been under pressure. Remember, it did hit that 1123 a little while ago and had a good bounce. But I think while this risk aversion there is for the US dollar, I think gold will remain relatively soft. We are short gold and have been for about the last week. We put shorts in around about 11.52, but we're still quietly confident, I think, that we will retest that 11.20 area, and then we might look at an area where we can buy. But at the moment, for us, gold remains a bit of a sell.
Having said that, John, our investment appetite for gold seems quite strong when you look at the holdings and the inflows into the Spider Gold Trust.
Yep. Oh, look, Sheree, you're dead right. That will never go away at the moment because when you look at the trusts and the way they work, it always makes sense for a lot of investors just to have some exposure to gold rather than exposure to the miners of gold. So I think that is a trend which will remain with us, but I think more of the hot money will be playing the gold market in terms of, say, the short side or the long side. And I think that's where we're seeing some of the movements. The trend for gold still remains higher, but I think this is just a short-term correction.
Do you think we'll see 95 before 75 in oil, Jonathan?
I think that is very interesting at the moment. Remember, we're going through that build period, and the data just the other night suggested that build was happening. So I actually feel that if we continue to get a little bit of sort of relatively sideways action in terms of economic data, then I think crude oil will come under pressure. I actually feel I'd like to see it below that US $80 a barrel. Remember, we have had concerns, particularly out of OPEC, that a lot of the members are acting outside their quota. So I think they're a little bit concerned that the recent rally we have is not sustainable. So I think, for me, I think oil still remains a little bit under pressure as well. In fact, we've got more of a soft bias on commodities at the moment.
Yeah, Jono, speaking of soft commodities, in fact, let's get up to speed on some of this. Yeah. US soybean futures above $10 per bushel for the first time in 3 months. We've got wheat rallying on a technical short covering, and corn also showing a bullish technical close. These are factors that you were telling us about the other week to watch out for. You think the trade for softs is actually quite strong?
Absolutely. I mean, this is the interesting thing because, Karen, when we see what's happening with the US dollar, a lot of people would put that strong US dollar weak commodity trade on. Now, we're seeing that occur with our primary inputs, but we've seen it sway away for the softs. And there's some good fundamental reasons starting to occur, particularly out of China for the soybeans. And that's something that we're focusing on. It's an interesting situation. We feel that demand will remain for soybeans out of China. But more importantly, there's concerns of more of a drought and flooding in the one country. So when you look at that, it sort of says that there's a great fundamental story behind it, and I think that's why soybean will continue to trade higher.
Okay, Jono, now the task for you up there is to smuggle a money tree out of the Money Show. Good luck with that. Don't let Bernie and Ems lead you straight up there. We'll see you down here. Safe travels. Jonathan Barratt joining us from Commodity Broking Services.